Kate, good to have you here. Congratulations. Killer quarter.
Thank you.
Talk to us about the momentum.
Well, I think you just said it, right? It's nice momentum over many quarters now. And so I think what you're seeing is really the sort of multitude of initiatives that we've laid out, the consistency of that playthrough and, building momentum there. And that reaction is a result of those factors. So, that US revenue growth of nearly 9%, the highest in the post-COVID period, the flow through to really solid contribution margin, high EBITDA margin, and then, best free cash flow that we've had since Q2 of 2020. And so all of the things that we have been working on to drive and improve that customer experience continue to come together, help us gain share, and we're flowing that through quite nicely.
Who are the customers who are buying right now? Because when you hear a superlative like, most since post-pandemic days, you think to yourself,
Yeah.
okay, well, who are the customers who have the money right now to be buying this stuff?
It's a great question. And we actually went on the call, we went into a little bit of detail around Perigold, which is our luxury brand. It's of our sort of family of brands that plays at the highest end of the market. And we do see really nice momentum there. We said that was growing north of 30%, right? So you do see nice momentum in the higher end segment, the top part of that K-shape, if you will, in the K-shaped economy. That said, Perigold is only, a little over 400 million. So when you think about the overall Wayfair business, the Wayfair.com brand, that mass market brand, has to also be performing well to get to that 9% comp. And so what we're seeing there is ongoing share gain. And we think that's from programs like our Wayfair Rewards program, programs like the stores, which Carol, you had the opportunity to see, programs like our Wayfair Verified. The combination of those things is helping us, both attract and retain these customers and have them engage more and more.
Tell us about the stores. My understanding is that more than 50% of store customers are new, but tell us about,
Right.
That's a big investment, Kate. We've talked about it. I did go there. I was kind of blown away by the size and the scope of it. You guys continue to add stores, but tell us about, we kind of marveled over how everybody had pushed back on brick and mortar for years. And so interesting, that you're finding success with it, but tell us how this is really moving the needle for you.
Yeah, it's a great call out. I think we're seeing that folks really do desire that multi-channel experience. And, the stores are supported by e-com and e-com supported by the stores. Now, obviously it's very early days on the stores. So they're a very small piece of this overall momentum. We've had the Chicago store open now for a little over 2 years. Atlanta, where we were able to meet, has been open since early spring. And then we opened Columbus about a month ago. We've also announced Denver opening later this year, and then 5 more stores into 2027. So the momentum, to use the word of the day, is building with these stores, but it is early days. But what we're seeing is customers, are new to file. So they're new customers coming to the store. It's been a great acquisition channel. Customers are also getting exposed to the breadth of what we offer. So engagement in more sort of frequency categories, decorative accents, seasonal decor, being able to touch and feel the product is a win for them. And with that combination of the breadth of selection that we offer online, that's very compelling.
You mentioned Perigold, this higher end brand, and it's actually like it lives distinctly from Wayfair.
Yes.
I'm wondering about the momentum that you're seeing there, but also the momentum that you're seeing more broadly, and how you're confident that it's sustainable.
Yeah, it's a great question. I think it goes back to the fact that most of this momentum is coming from self-help measures, right? So these are our own initiatives that are driven by it. We think the category itself is, overall roughly flattish. And, the category's been in a complicated place over the last few years. So, flattish place is a nice place to operate from. But the, close to 9% comp in the US, that's driven by us gaining share. And so what we can see is the building blocks of these pieces getting into place, and then we see how they compound on each other. So the Wayfair Rewards program, for example, is supported by Wayfair Verified, which is also supported by improvements and changes to the storefront experience. And then to your point around Perigold, it does have absolutely its own, separate go-to-market facing site, but it leverages the entire back-end infrastructure. So the logistics infrastructure across, Wayfair Inc., the tech stack, the ad tech stack across Wayfair Inc., how the storefront evolves. And so we're able to build, test things on Wayfair and then push them out to, Perigold or the specialty retail brands. For example, Wayfair Rewards started on Wayfair, and that'll be launching at some point over the next year in the Perigold system as well.
But you have to concede, like, Kate, we talked about this, existing home sales still, not on fire, like the housing market.
Yeah.
To see these results amid that backdrop, if that stays, let's say existing home sales is depressed for another 12 to 24 months, you guys have talked about kind of growing, I think it was roughly 20% growth through company-specific initiatives. I think you said it earlier this year. If we kind of still remain somewhat depressed, do you still feel like you can achieve those goals? Or does it require a housing recovery? Because it is pretty remarkable in this market to see these results.
Yeah, so I think you're referring to Neeraj and Steve, our co-founder shareholder letter earlier in the year, and they talked about these initiatives that could get us back to that, double digit, and then, from there to that 20% growth. And we do have a high degree of conviction in that. We feel very good about these initiatives and the building effects of these initiatives. Obviously, again, that close to 9% comp on the U.S. this quarter, that high single digits guide. So we're building there, but the momentum is sustaining.
You mentioned the way that you're doing this internally and the way that you're gaining share from a market that is relatively flat. Wayfair Rewards, how does that play into that and the metrics that you're seeing there? What changes are you seeing when it comes to frequency, retention, customer lifetime value, payback relative to folks who are not members?
It's a great question. So what we, wanted to try to do with Wayfair Rewards was exactly to drive up that frequency. The average Wayfair customer shops, with us or buys with us just under 2 times a year, whereas a Wayfair Rewards customer is, 3 times a year, right? So you're seeing an incremental purchase from them, which at an AOV of $300 is pretty meaningful. And so the Wayfair Rewards program is really designed around frequency and ongoing engagement for the consumer. And we are seeing that from those rewards customers. We're also seeing them shop categories that are not, we are very well known for furniture. The rewards customers, though, are shopping decorative accents. They're shopping kitchen and accessories. In some of these categories, they get preferential pricing or they get early access to sales. And so those things sort of reinforce the quality of the experience for them in that rewards program. And then on the P&L, we've talked a little bit about how obviously rewards has an impact on gross margin because of the cash back element of it. But it's helpful on what we really look at, which is contribution margin, because the rewards program, costs less obviously on an ongoing basis to get that incremental sale. So a lower ad cost as a percent of net revenue, meaning it would be accretive to the contribution margin that we really look at and ultimately to EBITDA margin, EBITDA dollars.
Hey, Kate, one of the coolest things is you guys really are a technology backbone, and you go back to the origin of your company, which is really interesting if you think about, kind of what's going on right now. You've partnered with different platforms, whether it's OpenAI, Perplexity, when it comes to agentic commerce. So what key performance metrics are you guys seeing when it comes to AI-driven shopping specifically? Is it a meaningful contributor when it comes to traffic or to sales? Are you seeing that?
Yeah, it's a great question. So we work across many of the LLMs. You mentioned a few. We also work with Gemini. We've said that we're an early partner on Universal Commerce Protocol through them. We do see traffic today is small from these sites, but it's growing meaningfully, right? So it's small but rapid growth. We think it's really important to be where our customer is at. And so if our customer desires to shop through these channels, we want to show up well there, whether that's, through actual shopping like Universal Commerce Protocol, or, through ads like on OpenAI, or if that's through, better search performance and how you show up in LLM-based search, right? So all of that, those are all things that we look at and that we work with a variety of these partners on. I think this is a place where our scale benefits us. We have nearly 25 years of history and data here. And we know both, one, how to work with these partners. As you said, we're technology first, and two, we bring to it, some important data in terms of how we're able to show up there. And I think that helps the customer ultimately, because if our customer, wants to be using the platforms and shopping there, we'll be there. If she wants to come to us through the app, we're there. If she wants to, go into a store and shop with us, we're there as well.